Hi, everyone. Thank you for taking the time out of your day to attend our Convert More Leads into Loans webinar. Your two presenters today will be myself, as I said before, Scott Remite, and the other is Mark Tedderus. Here's our contact information. If you want to have a pen and paper handy, just so you could jot this down now. I used to give this out at the end of webinars, but sometimes things come up and people have to pop off. So if you need any further communications or need some more information about the service, feel free to contact myself directly, right up top my email and direct phone line, along with Mark Tedderus, his phone line and email as well. I'll leave that up on the screen for about another 10-15 seconds, so you guys can copy that down if you need anything else after the webinar. Keep in mind this webinar will be recorded, and a recording will be sent out, so for any reason you have to pop off early, or you just want some more explanation or want to review it in the future with someone else, we will be sending out a recording within the next few days after this webinar. I want to introduce myself. As I said, my name is Scott Remite. I am the Borrow Smart Analysis Product Manager for Mortgage Success Source. I have successfully trained over 1,000 loan officers and hundreds of companies on the Borrow Smart software. I have 6 years in the financial services industry. I spent the last 4 years at Mortgage Success Source. I have a master's degree in finance from Rutgers University. And I also want to introduce our guest speaker today, Mark Tedderus. He is the Vice President of Banking Solutions for Mortgage Success Source. In this role, he works closely with senior executives at the mid to large-size mortgage operations, helping them increase their revenue and reduce compliance exposure through successful implementation of the Mortgage Success Source solutions. He has led 2 multi-state mortgage banking firms as CEO and Chief Operating Officer. He is a past president of the executive board member and legislative committee chairman of the Minnesota Mortgage Association. He served on the business customer advisory boards for several top national lenders, including Wells Fargo and JP Morgan Chase. Who is Mortgage Success Source? We are the Mortgage Market Guide, Loan Toolbox, Platinum Marketing, the Borrow Smart Analysis, Vantage Production, and now the In the Lead CRM. You may be familiar with our Mortgage Success Source tools and services, as the Mortgage Market Guide and Loan Toolbox have been providing loan officers with great information and technology for about the past 10 years. Borrow Smart Analysis is a new addition to our arsenal of tools for loan officers. We've been the exclusive distributor for 2.5 years, and now it's actually part of our suite of products for about the past 6 months. Vantage Production is a new corporate solution that has end-to-end compliance marketing, along with the Sales Presentation Center, also known as Borrow Smart Analysis. If you would like any information about our other services or what we offer here at Mortgage Success Source, you have my contact information. I can siphon that to the right people. Before I jump into our webinar outline today, I want to show you with the end in mind what you'll be able to accomplish with this presentation. I'm going to jump into the tool now, actually, and show you a quick presentation. After this webinar, you'll be successfully able to show your borrowers in about 3 to 5 minutes different refinance, purchase, buy versus rent, open house flyers presentations in a more professional way than you've ever done before. What I have here is one of our sample presentations, and I'm just going to quickly scroll through it. This is a pre-GFE presentation that shows a refinance scenario. All the key information you want to show your borrower. Stuff like break-even months, new time to debt-free, total wealth impact over 10 years, how much better off this borrower is going to be by doing this refinance. It goes into more detail why he's better off by $35,000. Explains the benefits and disadvantages of programs you may be recommending, and if you want to, even include full amortization schedule tables. Keep in mind this is a complex report. You'll have the ability to make it as simple or as detailed as you want, but I just wanted to give you an idea where we'll end up at the end of this demonstration. I'm going to jump back into this webinar outline and let you know what we're going over today. Mark Tedderus will be going over compliance in the industry today as it relates to the CFPB and the FTC MAP Act, fair lending. I'm going to be talking about higher interest rates and what that means to you. Also about where all the refinances go, how to use Borrow Smart Analysis to navigate the purchase market, maybe FHA versus conventional buy versus rent type scenarios. I'm also going to let you know how to enhance relationships with referral partners through the Borrow Smart tool. This is our mobile application and open house flyers. Keep in mind, we're going to be offering special webinar pricing for all attendees today. That's going to be available today and tomorrow only. So after this webinar, if you think this is something you want to include as one of your tools, we're going to be offering special pricing, which I'll go over at the end. With that, I'm going to be handing over the presentation to Mark Tedros right now, and he's going to go over the compliance in the industry.
Thanks, Scott, for the introduction. My name is Mark Tedros. I think you saw a little bit about my background there. The one thing I did want to point out for everybody out there is that when I started in this business back in 1993, I did start in the loan origination side. I continued to originate mortgages right up until I sold my company in 2009. So I have a deep appreciation and understanding of what loan officers face on the street every day, not only in trying to generate business, but also in taking care of their customers, and in the last couple of years, dealing more and more with complex changes in the compliance arena. And so the first slide that I'm putting up, and I just want to go ahead and ask this question: is this your institution's or your pre-good faith estimate loan presentation? And for many, many, many loan officers across the country, the answer is yes, that's how I communicate. And so just to set the scenario for you a little bit, this is an email that went from a loan officer to a potential borrower in response to a telephone inquiry that they'd had earlier in the day. And so as I look at this, I see that, yes, I have a few options for you, and the loan officer goes into explain a little bit about the current situation and what they could do in terms of rate and payment, and even shows a couple of different terms of mortgages, a 30-year, a 20-year, and then even shows a 5-1 ARM for comparison. So you look at that, and if I'm maybe a sales manager, I'll say, okay, great, my loan officer is following up, they're on the ball, they sent out this well-articulated email the same day following up with that customer, or prospect, I should say, who's trying to get the business. So again, in this case, my friend who had received this email had not yet applied for a mortgage. They're still in shopping mode. And so the question that I'm going to pose to you is, and I want to do this by a show of hands, although we can't actually do it that way, but just think to yourself, is this an advertisement? And I'll go ahead and I'll move on to the next slide. And we're going to talk a little bit about something that came into being in August of 2011. The FTC, which is the Federal Trade Commission, published its MAP advertising rule. And the MAP is Mortgage Acts and Practices. And the rule went into effect, again, it was August, I believe around the 11th or 12th of 2011. And what it covers is, in quotations, commercial communication. Just think of that. You can replace commercial communication with the word advertisement. And what it is, they put in a definition. It's any written or oral statement, illustration, or depiction that is designed to effect a sale or create interest in purchasing goods or services. And it does not matter what media it appears in, and they actually give a little laundry list of examples. And you can see newspapers, magazines, radio, television. And then there's internet and cellular network. It actually covers emails and text. So there you have it. What we are seeing is a new rule defining that one-to-one communication between a loan officer and a prospect, meaning the email that we just saw, as an advertisement. So it's unambiguous, and it is considered an ad at this time. So now I'm going to go back, or forward actually, and we'll take a look. Again, here's the same email, and in this case what we've done is highlighted a few of the terms here that are kind of interesting. So we have a 30-year option at 3 7/8 based on a loan amount of $406. The P&I payment would be $1909. There's a 20-year option with similar information. And then there's also a 5-1 ARM. What he's showing is the start rate here, or teaser rate for that ARM, and what the principal and interest payments would be. And you can see I've got little notations here that these are, in the advertising world, known as trigger terms. And anytime, as everybody knows, if you're familiar with TILA and Reg Z, is that when you use a trigger term in an advertisement, you need to give full disclosure of all the terms of that loan offering. And so you can see those things are missing here. We've got no APR, or annual percentage rate disclosure, which again is another requirement under TILA. We're missing the index and margin for the ARM. Also regarding the ARM, the P&I payment is based on the initial note rate, not the index and the margin. And we're missing any reference whatsoever to other costs, monthly costs of owning a home, notably the tax and insurance payments, all of which should have been included in this ad. And there's other numerous small things wrong with this when it's considered an advertisement, but I won't go into all those details at the moment. So the question is, why do mortgage loan officers continue to send out these emails? And I would submit to you that the answer is it's relatively easy, it's quick to do. That particular lead that called in, it might be one of 3 leads that person's going to call today, and so you're not sure, how solid it is. You don't want to put them into your loan origination software yet and start generating all the compliance and disclosures and things that might go along with that. It might just be cumbersome to open up the LOS. You might be out in the field when the lead came in. Any number of reasons, legitimate reasons really, for a loan officer not to want to, start cluttering up the LOS to generate a good faith estimate, or multiple good faith estimates in this case, to start to demonstrate to a consumer what their loan options are. So oftentimes it's just having the lack of a good tool causes these emails to be used. So what we're going to show you today, and what Scott showed you the end product of, and here's just a slide shot of it, is what it really could be. And I will tell you that the production of this nice, in this case 4-page presentation that can be emailed or posted on the web for the consumer to access can be done in less time than it took to generate the email that we saw earlier. So from an efficiency standpoint, again, having a good tool can make all the difference. Let's talk just a little bit about what went into creating the lead. And there's table stakes to be a professional in this game, and they include things like the training sessions you may have went through as a loan officer, learning all about the business. There are the tools that you yourself may have invested in to help you generate leads. You may have direct marketing and advertising costs that you're having to bear, as well as all of the experience and time you've put into becoming a professional. So all of those things represent, your chips in the game to be able to have access to talk to that lead. The ultimate goal, of course, is to take that lead and convert it into a actual 1003 that you can put into process and take to closing of the loan. That is, in fact, what we're in business for. And so that what happens piece in the middle is where the loan presentation really happens. And that's what the tool Borrow Smart Analysis is designed to do, is to help you have that conversation, that intelligent dialogue with the consumer that they can understand and that you can put in front of them very clearly and plainly, so they have actionable information to move ahead. And so with that, I'll show you just another example. And again, this is another real-life example. I did not make these up. I've redacted it so that to protect the guilty from identification here, but this did come from a top 10 lender. You would all recognize the name associated with this. So it's not something that's only happening with little companies or in broker shops or independent mortgage banks or community banks. I mean, this really covers the waterfront. It happens in all types of shops out there. So again, this is a situation where now we said, hey, Todd, below are the numbers we discussed. These are based on today's rates. The home value of $1 million, credit score is 740, and these rates can change at any time. So nice attempt at disclosure there. Please feel free to reach out to me with any questions. I'm happy to help. And we can see that the loan officers identified a 30-year fix, 3.5 at 1 point, 3 3/4 at 0 points. And again, you can see it up on the screen that there's no APR. The appropriate disclosures are not there. This is, in fact, very, very far out of compliance. Now, the other question, take it beyond compliance, is what have I really done here as a loan officer to convince that customer, Todd, that he should be doing business with me instead of the other people on his list? And I would submit to you, if I'm Todd on the other side and I get this email, I go, wow, okay, that's great. That's what he told me on the phone. I get that. And no, I don't think I have any additional questions for this loan officer at the moment. What I am going to do is call the other two on my list and see what kind of interest rate and point combinations they can offer me. And so obviously that's not the outcome that the loan officer was actually looking for. What they are looking for is to have Todd become a customer of theirs. And what we're going to show you today, what Scott will go through, is how we can actually do that. And we can do that by using a little bit of consumer psychology. And these are answering the questions that the consumer really needs the answers to in order to take action. In other words, having clarity so that they can move forward. And those three questions are, number one is, can I afford it now? Meaning, do I have the cash for the down payment or the closing costs, whatever it is, to enter into this transaction that you're presenting to me? And you'll note that none of that information was contained in either of those emails we looked at. The second question that the consumer really needs answered is, do I have the cash flow? Meaning, am I comfortable with the monthly payment that's being presented to me? And again, not having the full picture in those previous two emails, the consumer really does not have a way of answering that question. And then number three, and this is perhaps the most important question, but it's one that a lot of consumers may or may not necessarily have top of mind until it's pointed out to them, is, can I afford it later? And what that really means is, what's the net impact to my cash or wealth position over time? And specifically, the time frame that we're talking about is whatever time frame it is that the consumer feels they may be living with that mortgage. So whether they're planning to move at some specified date in the future, or would think that they would have a refinance or be able to prepay the loan or pay it off over time, one of those questions need to be answered. And so again, none of those prior emails was able to answer that question, any of these questions. But by doing so, you can actually increase conversion rates by up to 70%. And this is research that's been done with some very large firms. Actually started out with some large nationwide real estate companies that had in-house mortgage operations and were disappointed with their capture rates, and we're trying to figure out how they could do a better job. And so the research is it's empirical. There's a lot of numbers behind it. And with that, I want to go ahead and we'll move forward, and I want to put this back to Scott.
Let me just bring the appropriate screen up.
Scott, while you're doing that, I wanted to mention one other thing. I did say in the beginning I was going to talk a little bit about fair lending.
Sure.
And it's something that as Scott goes through this, you're going to see the side-by-side comparisons and how a consumer is able to make a choice based on three or even many, many more options as to what loan would be the best and most suitable for them. And so that does play into fair lending in the future. If you're not aware of this, in an event of a foreclosure, the statute of limitations is waived. And so having documented how the consumer made their choice and that they were given options to be put into the right loan can come into play in a fair lending scenario. So that might get a little more complex on the compliance side, but it is something just to be aware of that, again, this helps with compliance and protection for any compliance officers in the audience today. Thanks, Scott. Go ahead.
No problem. And thank you, Mark. That was a great introduction to the service, great introduction to compliance in the industry today, which we know is now more prevalent than it's ever been in the past. Keep in mind as we're going through this presentation, if you have any questions, feel free to type those into the question box. We are going to leave the last 5 to 10 minutes available for Q&A. I've seen a few come in so far, and they all seem to be about the viewing of this webinar for later. Yes, we are recording it, and as I said in the beginning, I don't know if everyone was here in the beginning, but we will be sending out a recording within a few days, so you could use this for reinforcement or sharing with some fellow colleagues who maybe were not able to attend today. And what I'm actually in now is, if you guys could see my screen, is the Borrow Smart Analysis software. It's a web-based program, and what that means is it requires a username and password and internet access. There's no software you need to download, so if you're at home, at work, on an iPad, in an open house, this system has the ability to be open anywhere with internet access. I don't know if some of you have seen this system already or if this is a first review for you, but I'm going to be going over it from scratch, from start to finish, showing you a few sample plans. As I said in the overview, we're going to go over a buy versus rent scenario, a refinance scenario, an FHA versus conventional, and an open house. Each one to take about 5 to 7 minutes, and keep those questions coming in as I go through the system. But with that, I'm going to get started, and I'm going to start with the just FHA versus conventional scenario, something that comes up very often. The reason I'm going to be talking a lot about purchases today is because interest rates have creeped higher over the past few months. And that's something we as a company, we see that continuing to happen. And with that, refinances might be coming in much less than they were last year. So what does that mean? As a loan officer, I have to secure that purchase business again. Purchase business is my bread and butter. It never goes away as refis go up and down with the interest rates. With that purchase business, it's stuff like attacking first-time home buyers, working with referral partners, enhancing those referral partners, working with different types, whether that's financial advisors, CPAs, people that I might have not think to get leads from, and creating a symbiotic relationship with those types of partners I may work with. This system has the ability to do all of those things. I'm going to get into that as we talk about the open house flyer, the mobile application, but let's first start with the simple FHA versus conventional that you'd show your borrower pre-GFE, whether he's deciding, should I put the additional 1.5% down? Does it mean that much to me? And I'm going to go through it from start to finish. Before I do that, I just want to go over some simple My Account type features. You'll see here the Mortgage Success Source logo. This would be branded with your company logo and your personal headshot. So every presentation I show, keep in mind, would be customized for you. You input your information one time. You can link to your social media, and what that has to do with is the mobile application. I'll touch up on that when I go over that portion of the site. But keep in mind you have your LinkedIn, Facebook, or Twitter social media sites right in the My Account. You could also set some report colors that kind of match up with your company logo. And you could also add a report attachment. This is a PDF file that's able to be uploaded. It could be additional disclosures, a company brochure, or even a little PDF file talking about you yourself, how long you've been in the industry, and what you've done in the past. The other tab inside of the My Account besides the branding are the defaults. This is to save you time as you're going through the presentation. You could remove certain loan programs you don't offer. So if your company doesn't offer reverse mortgages, you deselect that box and it's not even one of your loan options. Along with setting some closing cost templates, appreciation rates, tax and insurance. This is all to save you time as you're going through these presentations. You set it up once, click Save, and then every time I use this system, it has that done. The Presentation tab. This is where you'd spend about 80% of your time in the system. This is where you show those different templates. And by templates, I say refinance, purchase, second home, buy versus rent, open house flyer, seller buy down flyer. Let's go with the purchase. So I'm going to create a new plan. And one of the things I'm going to stress in this demonstration, this is a very easy system to learn. Some of these tools out there that loan officers try and get acquainted with, it seems good in the beginning, they get into it, and after 2 hours they've given up. I was able to run with this program in about 3 to 5 plans. What that equates to time is about an hour, hour and a half. Some people pick it up much faster. Some people it takes a little bit longer. But you'll see there's only really 3 tabs: Manage, Borrow, Present. And that goes through every template that I'm doing. 3 tabs. The Manage is your client information. The Borrow is where you show those loan scenarios. And the Present is where you select how you want to get that information over the borrower. So let's go over the Manage tab right now. Let's just make up a contract price of $200,000. And then I'll pick a plan title. We'll call this one FHA versus conventional. I put in some basic client information. Keep in mind this is for my records. I don't have to go into the address, city, state, phone numbers if I don't want to. Some people who are very analytical want to have every field filled out. That's absolutely fine. We put it there. For me, I'm just going to get away with a name. I'll put in his income. And the reason I'll do this is I can show a pre-tax, after-tax rate, and then his monthly tax savings based on his tax bracket. So I'll click this little calculator. It'll bring up our tax brackets. Let's say he's $80,000 and he's single. He falls into that 25% federal tax bracket. And we'll just call this guy Scott at AOL.com. Fake email. Next, I'll go to the current liability section. I have the ability to put in any type of monthly installment the borrower may have, whether that's a mortgage if I'm doing a refinance, credit cards, student loans. So if I want to show them a full payment with his loan, I could do that. So that's every monthly payment he might have. My thought process is keep it as simple as possible. Do not try and show too much unless it's going to affect my mortgage and get that sale. So if I'm doing a refinance, I may show some credit cards that he has if I'm consolidating him into that mortgage. But if I'm not, for my purpose, I don't want to confuse him with additional numbers that really have no effect on the transaction. So for this purchase, let's just leave those current liabilities blank. I have a statement of interest. What am I looking to do for this borrower? Maybe Scott has $10,000 for a down payment, and he doesn't want to use up all of his cash. He has some moving expenses. I could type that into that box right there. For this demonstration, though, let's go right over the borrower tab. The current liability section is blank, so I'm going to minimize that tab. We have no current liabilities. The first option, I'm going to show him a 30-year FHA. And then what I'll do is I'll select the 30 from my drop-down menu. There's no equity line of credit in this one. Remove that. Put my loan to value, 3.5% down. Whatever rate I'm offering, we're going to pull a national average of rates and add a quarter point. So let's just leave it at the 3.5 right now. If it was different, if I wanted to say adjust it 3 3/4, I could put it at 3.75. But let's stick with the 3.5 for now. And you see it automatically calculates my P&I payment of $866. Then I'm going to click this little calculator. This allows me to enter some closing costs, additional monthly expenses the borrower has with this loan. Let's just make up some mock numbers. Let's say there's about $750 in origination fees. My total closing costs, I don't know, let's just make it $4,500. Escrow and prepays, let's put another $2,500. And let's say there's a seller credit on this loan, or a lender credit, whoever wants to be, about $3,500. Let's put in our taxes. I'm in New Jersey, taxes are pretty high, so let's put in a 1 1/4 annual percentage, another $60 homeowner insurance. I'll put in my 1 1/4 for MI because it's a FHA. Speaking of that, right up top, this is an FHA VA USDA loan. It is. So I click that box, and then I'm going to add my upfront funding fee, which is 1.75%. That needs to be funded into the loan, so I'm going to click this Include in Loan button. So right here, I'm completely done with my FHA scenario. Just got to enter the MI to continue for 60 payments or 78% of loan to value. I click Save. That first option is done. What I'm going to do next is click Duplicate for my second option. Maybe I want to offer a 30-year at 5% down, so I'll label this one 30-year conventional. And then all I have to do is change my loan to value down to 95%. Let's say I'm offering the same rate. Click this little calculator, remove the FHA, adjust my mortgage insurance. Maybe it's like 0.8, let's say 0.86 on the conventional now based on his credit. Click Save. I'm done with my second option. I have the ability to show up to 3 plans per presentation, so I'm going to expand this third alternative. Let's say maybe I want to show him a 30-year, 5% down with lender-paid MI. 30-year, 5%, lender, MI. And you could label these whatever you want. I think it looks better to kind of label the loan than alternative 1, 2, and 3, but some people leave it as that. I just like a little more description when I'm showing my clients. So I'll pick it. You know what? I'll just click Duplicate one more time. And let's say I'm offering the lender-paid MI with an increase in rate. So let's say with that scenario, I'm offering it 3 3/4, so 3.75. What I'll then do is click the calculator and remove the monthly mortgage insurance. And I click Save. At this point, if I've used this system before, I'm done. I'm ready to go over to present and select how I want to present this to my borrower. I'm going to go into a little more detail because it's the first time you're seeing the system, and I want to show you what else is inside of this borrower tab. It goes over those 3 questions that Mark was addressing. Does this make sense right now? This all relates to the closing costs. What's required for each one of these transactions with my down payment? Let me just take a look at this one real quick. Oh, yeah, just 195. I was wondering that was a little off. I took out the finance MI. Okay. I knew they should be the same amount. So 14,250 on the 5% downs and 11,250 on the FHA. The reason it was at 93 is because I removed the FHA at 1.75%, so it was a little less. It was at 93% loan to value. These are both 5% down, so it shows the borrower how much more he would need to bring for the 5% conventionals compared to the FHA. What does it mean to him on a month-to-month basis? His FHA payment will be around $1,355. The 5% down conventional with MI is $1,255. It's $100 less. The 5% down without the monthly mortgage insurance is $200 less a month. And then I show the borrower his future wealth impact. Does it make sense for him over time? I'm going to set a minimum payment structure across the board. And then I pick the time frame. If it's a first-time home buyer, I may only show 5 years out. If he's been in the home, I'm showing a refinance, he's been there for 10 years. Realistically, if I look 15, 20 years out, the further I go, the bigger the numbers at the bottom will seem. Obviously, the drop in interest rate affects the total wealth impact. But for this scenario, it's going to use the FHA as a staple and then show the borrower how much better off he'd be over these next 5 years compared to the FHA. And I'm just going to go right to the bottom line. He's about $9,000 better off with the standard 5% conventional, or almost $15,000 with the lender-paid MI. If I wanted to show him why, I could expand these payments. It's going to be due, look at the tax and insurance. $28,000 in tax and insurance with the FHA, only $23,000 or $16,000 with the lender-paid MI. I don't have to show that if he doesn't ask me, but I just want to get to that bottom line and tell him, look, over the next 5 years, coming up with that 1.5% down, it's going to save you a pretty good amount each month, and your total wealth impact is about $10,000 or $14,000 better off. I'd be ready to present this. Here I have the option to pick the length of my report. Cover, introduction, 2-page, detailed, and a loan program matrix. This is our most common. You could tailor this based on whatever you determine that you like as a report. It's user preference, but this is the one most of our clients use. I'm going to show you that one right now. I'm going to launch the wizard. I see my little blinking window. Let me know when it's ready. And here's that presentation I showed you at the beginning of our webinar. This is that final product. It'll have some basic client information, his name, the date. It'd be your photo, your company logo, your color scheme you pick, your introduction with your full disclosure, a content analysis, what's going on in this presentation. Then it goes over the summary and payment comparison. This is all of the key information I'd want to show my borrowers. Do you see how this FHA is highlighted? I have the ability to pick which loan I want to present. So let's say I thought the lender-paid MI was the best option for him, and he's telling me, Scott, I can come up with that additional 1.5%. I see how much better it is for me over time. What I then do is inside of the Borrow tab, I propose that one with this little toggle switch. I click that one. This one will now say highlight. So I go back to present. I'll launch it one more time. And you'll see now it gets this, I don't even know what color that, almost like a salmon color around the lender-paid MI option. Let's just go over some of the key numbers. The first top box goes about the loan amount, his term, the interest rate on each loan, his APR on each loan. APR is calculated based on the closing costs I enter. And then it shows the minimum monthly payment required. It then breaks down all the assumed payments the borrower would be making over the next 5 years. Keep in mind, I set that time frame. It shows interest payments, principal payments, total payments, and a percentage going towards interest over those next 5 years. And then this key number chart, I stress this sometimes. This is the most important information that I want to show a borrower. I show them our total closing costs are about $4,200 across the board. I show them the cash needed closing with the down payment, the monthly payment difference, showing them $100 less or $207 less with the FHA compared to the conventionals, the wealth impact, which is what we determine how much better off you'd be over those 5 years. If he wants to know, he's saying, Scott, why am I better off by $9,000 or $14,000? I could then go into the payment and wealth comparison, and it goes into more detail. Keep in mind, this is one of those things that I don't have to show unless they ask. Most of my information is on this summary and payment tab. This was for a purchase. When I do a refinance, it's almost a no-brainer. I'm going to show that next just because it fits well into the presentation. I was going to do that third, but I'll go to that next. When you show a borrower, here's your current scenario, here's what I'm thinking about doing for you over time, it really helps you paint a picture of how much better they be in the future, even if that's a small drop in interest. Maybe it's not even a full point. Maybe it's a half a point, 3/4 of a point. It makes a big difference over time, especially depending on the size of the loan. But as far as the presentation, when I get to this point I'm at right now, how do I get that information over to the borrower? Mark touched on those ways to present. I'm going to go over them in full detail right now. One, I have this live HTML link. I could send this link to a borrower. He could click it. It'll take him to his presentation you see right here. I don't know if I like that one too much. I always want to be there to explain what I've done for them, have them on the phone, have them in my office, but we know sometimes that's not feasible. I can't get them to respond by email. I can't get them to respond by phone. maybe we started a phone conversation but we got cut short. That's where we added this publish feature. This is a live screen recording. So as long as you have a microphone on your laptop or computer, if you don't, you can pick one up at Staples for about $8 so it can record your audio. What I'm going to do is start this screen recorder. This allows me to record myself talking about the plan. I could say, Scott, I just wanted to touch base with you. I know we started that phone conversation about the FHA loan and maybe considering a conventional loan, but we got cut short. I just wanted to go over that in a little more detail with you. Stuff like I wanted to show him his monthly payment. Scott, your monthly payment with the FHA is around $13.55. The 5% will take you down to $12.55. Or if we go with that lender paid MI option, which I thought was the best option, you're down to $11.48. I also wanted to show you the wealth impact. By going with those conventional options compared to the FHA, you're going to be better off by about $10,000, almost $15,000 over the next 5 years. I don't know how long you plan to live in that home, but even over the next 10 years, there's a big benefit with going those conventional options. If you want to see that, feel free to give me a call. I'll be glad to go into some more detail with you. Here's my contact information. Feel free to reach out to me. Click Done. Obviously, I go into more detail than that, but I just wanted to give you guys the idea of how that video screen capture works. I put in his name, his email, subject, I upload it, and then I click Send. He'll get that email. He'll press play. He'll hear my voice talking about that presentation that I created for him. Once again, with refinances, if you got some people that you've been reaching out to, you're looking at their file going, wow, they're at 5%. Why aren't they calling me back? Rates are going to pop up. Create one of these videos for them. Send it to them in a video option. When they view it and they see some of these numbers, it adds a whole nother layer to your presentation. I think the best option is having them on the other end of the phone. If someone calls in and I have the ability to share my desktop with them, I'm going to absolutely do that. And that's through this live screen share. Built into my system is a software called iLink. iLink is just like a GoToMeeting. So picture what I'm doing with you guys right now built into my program at no additional cost. Someone calls in, wants to talk about maybe a first-time home buyer. They're saying, I want to look at an FHA for this property I've been taking a look at. All right, well, are you by your computer? Do you have 10 minutes? Absolutely. I start the live screen share. I send him a link. Here's a custom-specific link. Write an email. He clicks that link. I click Start Sharing. He'll be able to see my desktop, and as long as I'm on the phone with him, we can have an audio conference. Very easy to do, and at no additional cost, we can go through exactly what I did with you guys right now, take down that personal information, go to the borrower tab, show the loans I want to show, and then get to that final product. And I'd say, Scott, don't worry about jotting any of these numbers down. I'll send you a copy for your records as we're done with this plan. Just pay attention to what I'm trying to tell you and showing you the benefits from each loan side by side. That was the purchase. I said I want to go into the refi next, and I'm going to. I'm going to create a new plan and do a refi. Let's just call this one Sample Refinance. Oh, my caps lock is on. And I see some questions coming. I will address those towards the end of the webinar. Feel free if you have any questions going through it, as I said, just to kind of pop those in that question box. Just kind of put the same information about the borrower. Let's just leave the email blank for time purposes. But this time I'm going to add a liability. The liability is going to be his current mortgage. And I'm going to put in all the details to that current mortgage. Let's say it's a $300,000 property. It's a primary residence. He's in a 30-year fix. Let's just say that's with Wells Fargo. He did a loan for $240,000. He had put 20% down. This is back in January of 2010. He's at 5%. Currently owes $228,000. Put in those same tax and insurance. And I'm just doing something that's fresh in my head so I know the numbers work. And no MI because he put 20% down. I click Save. At this point, once again, I'm able to go over to the borrower tab. All right, I'm back. First option I want to show is a 30-year to better rate. So let's just stick with that 3.5% rate, taken down from 5%, and I'll label it once again, 30-year. Click my calculator. We'll put in the closing costs. Let's just make it easy this time. Let's say there's $5,000 in total closing costs, and I want to finance those into a loan. I want to do a no-cost refi. Right there's my Include in Loan button. Click Save. Maybe the second option I want to show is a 15-year. just click duplicate, take a 15 from my drop-down menu, change the rate, let's say it's 2.5%, and you'll see my closing costs have copied from the previous screen. And for a refi, I may not show 3 options all the time. I'll keep it simple, so it's just A and B versus your current liabilities. One where I save them on the monthly payment, one where I give them a wealth building strategy. You could tailor this however you do your presentations. This is just my thought process and what seems to work with my my current clients. And then to go over those same questions, does this make sense right now? Absolutely. Your closing costs equals $6,500. I built those into the loan. It's not costing anything today. It's a $0 transaction. What about on a month-to-month basis? You were spending $1,660 before in your current mortgage. This 30 years could take you down to $1,425. I'm saving you $235 a month. That 15-year, it's going to pop you up to $1,936. If you could afford an additional $276 a month, I'm going to cut your mortgage short by about 13 years. And what does that mean to you? So does this make sense over time? Let's look a little further out this time. Let's look 10 years. And let's set the minimum payment requirements one more time. So then I'm going to show the borrower over the next 10 years how much better off he'd be with each one of these options compared to his current mortgage. With the 30-year, his total wealth impact is $22,000. What does that wealth impact actually mean? It's a combination of the savings or increase in payments, so he may actually be spending more like in that 15-year scenario, and then the increase or decrease in equity. So it's the correct way to figure out suitability for a borrower over time with a loan, his total wealth impact. And let's go over that. His payments compared to his current scenario, he'd be spending $199,000 over 10 years. The 30-year, it's going to drop him down to $171,000. The 15-year, he is spending more. He's going up to $232,000. Equity. If he were to sell the home 10 years from today's date, in his current scenario, he'd get a check for $190,000. I have a 2% appreciation rate. If I lower that appreciation rate, obviously his check would diminish. I would not use more than 2% in today's current market. Maybe your area is a little different. Maybe you've seen appreciation rates pop up. But over the next 10 years, there was a national study done. It's about 1 to 1.5%. We hit bottom, guys. We're out of that, and we're starting to see positive appreciation rates one more time. But as far as equity inside of the new 30, it's dropping a little because he's starting this from day one. So he's going from 173 to 166. So the total benefit, if you look in payments, that's almost about $28,000, but he's losing about $6,000 in equity. So that's where we get to that $22,000 total wealth impact. In the 15-year, yeah, he's spending more. He's almost spending $33,000 more, but look at the jump in equity. $173,000 check to a $260,000 check. So he's paying that home off faster, and that results in a wealth impact of $54,000. He might say to me, Scott, I have no ability right now to spend an additional $276 a month. I'm capped out at the $1,660. I'm barely getting by. Well, very easily I could say, listen, you have a lot to do with that $235 you're saving each month, and then I could add a payment. So what I'm going to do is take that $235 each month until the loan is paid off, click Save. Once I add that payment, I'm right on the same pay structure of what he was doing before. He's been doing this for 2 years now, so he's pretty comfortable with that. Actually, 3 years. We're in 2013, and he did this in January of 10, so he's been doing that for 3 years. What do I do with that additional money? I could either put it in a savings account with a rate of return. So let's say over 10 years, he expects 4%. $235 at 4% compounded interest over 10 years builds his savings account by $35,000. Maybe he's retiring in 10 years. I could say, listen, over the next 10 years, I'll build your savings account by an additional $35,000 just by doing this refinance. Maybe he's concerned with starting the loan from day one. He says, Scott, I don't want to do this refinance. I'm already 3 years into my current mortgage. I don't feel like starting one from day one. I click Repay. I then show him, look, just by doing this refinance and continuing that same payment you were making before with the drop in interest rate, you're now debt-free in 260 months, and you have 322 payments remaining in your current mortgage. His wealth impact actually increased a little. It went to $27,000 by making that additional principal payment. So I'm actually presenting 3 options here. One where he's just saving per month, one where he's making the same payment, and then one where he is moving into a 15-year. So at this point, though, once again, I'd be ready to present. I just wanted to go into a little more detail on how you'd use this wealth impact chart with the refi with these little calculators and adding principal payments. Let's go to present now. Let's do the same presentation as we did before and launch the wizard. Obviously, the cover page looks exactly the same. We got the introduction with the disclosure. But then the key numbers are going to change a little. Let's just go over this bottom tab. It shows the borrower, look, your total closing cost equals $6,500. It's not costing you anything out of pocket. We built that into your new loan, so it's a zero-cost refi. It shows them his monthly payment increase or decrease, saving $235 or $276 more. And then it shows them his break-even months. At what point is it going to be beneficial to do this refinance? It's about the 2-year mark with this new 30-year, and that's because he's starting it from day one. He's got to incur the additional $6,500 added to the loan. But 2 years out, you're seeing a positive wealth impact. And then over 10 years, it would cost you almost $30,000 not to do this refinance. And that's how I present. Take it for what it's worth, but people move forward with fear. When you tell them, listen, this guy's name, I named him Scott also. I'm making it look easy. Let's name this guy Joe. Joe, by not doing this refinance today, it's going to cost you $30,000 in wealth over the next 10 years. It's not costing you anything out of pocket today. I could save you $200 a month, and then over the next 10 years, it's going to cost you $30,000. What's stopping you from moving forward today? When people are on the fence and it's presented that way, it's very unlikely that they're not going to move forward. You're answering those three key questions. It makes sense today, it makes sense on a month-to-month basis, and it makes sense over time. That's where we got that study, and that's why it seems to work. And this is how the system presents that, right here in these key wealth impact numbers. Once again, if he asks me and says, Scott, why am I better off by the $27,000? I go into the wealth impact chart and let him know, look, your payments are identically the same with the additional $235 a month, but look at your equity. If you were to sell 10 years from today's date, you'd only get a check for $173 in your current mortgage, or I'm getting you a check for $200,000. You're paying your home off faster because you're paying less interest. Simple as that. And I could do one of those 3 ways however I want to present it. PDF, live screen share, or create that video for him. So that was our refinance presentation. I'm trying to get as much in. I know we're running towards the end of the hour. I'm going to go a little faster. I'm going to show you that open house flyer right now. One of the templates we have in here is the open house flyer. And as we get into that purchase market, you may be getting more requests for realtors to do those open house flyers. So I'm going to jump into that now. Same kind of process, create new plan, pick the open house flyer. The field's changed a little. Here you'll see a referral partner tab. I have the ability to upload my referral partners. Once they're in here forever, so I could just pick Jason, and every time I do a plan, Jason's information will pop up. I can describe the properties I want to describe, list all the amenities available. There's open fields for amenities. So say there's something listed in the NML list listing that's not listed here. I can type that in. Upload a property photo. At that point, I'll go over to my Borrow tab. Same process I showed you before. Put the loan scenarios I want to offer for that flyer. Click Present. And there's only one option. It's an open house flyer. There's no template there. There's no 2-page. It's just open house flyer. Here you'll see the final product. It'll be branded up with my photo, my company information, property information with all the amenities, the loan programs I want to offer with an automatically calculated interest rate and APR, closing costs, principal and interest, taxes, PMI. Breaks down the full disclosure, and this is a dynamic disclosure, so if I were to present an ARM mortgage, it would show the disclosure with ARM disclosure, which is obviously a little longer than a standard one, and then the realtor's information right at the bottom. So you have a fully customized open house flyer in about 5 minutes when you're doing the full plan. I haven't seen anything else on the internet that's easier than this, and it looks more professional. So as you get those requests on springtime, dealing with more purchases, you now have a template that does in about 3 to 5 minutes with the correct disclosure and full loan program information. I told you I was going to show you a buy versus rent. We're running towards the end. I want to leave a little bit open for Q&A. I'm going to show you one I've done already just to save time and not go through from start to finish. The only thing different compared to the refinance, in my current liabilities, I'd have a rent scenario instead of the mortgage. So I just pick rent. Obviously, the creditor is the landlord. Put in my payment per month. Go to the Borrow tab. Maybe this one was just 2 conventional options, a 5% down versus a 10% down. And then this one, I'm showing tax savings. So one of the things this homeowner will now have that he didn't have in this current option is interest tax deductibility. And I show him, look, it looks like your payment's going from $1,200 to $1,800 each month, but realistically, $322 of that monthly payment is tax deductible. So come tax season, end year, this mortgage is really going to cost you about $300 more than that current rental scenario we're in. And then it breaks down the wealth impact. Over 5 years, he'd be spending $72,000 in rent, and that's going towards paying the landlord's mortgage. It's not doing any wealth building strategy for him. Yes, he's spending more with the mortgage, 172 on 72 to 108, but look at some other key numbers. In this scenario, it would cost him about $20,000 out of pocket to close the loan. But over 5 years in total tax savings, that's almost $20,000. And then look, 5 years from today's date, if you were to sell that home, there's a nice big check for 70 grand. All things said and done, he's about $30,000 over 5 years. Total wealth, total net impact, better off than his current rental scenario. So teaching these first-time home buyers to feel more confident about owning a home, maybe spending that additional money per month, showing them the tax savings, it really is a no-brainer with a system like this, and really paints a picture for them what the advantage is to own a home versus renting a home. And we would just go through that same process and get to that final product. And it shows you, look, here's the break-even point of owning a home compared to your rental. It's less than a year. And some people don't realize how quick that actually happens. One of the other things I wanted to touch up on was the mobile app. The mobile app is something that you can give to your referral partners, whether that's CPAs, financial advisors, realtors. We see it most commonly used with realtors. What this is designed to do is enhance that relationship. This mobile application can be installed on iPhone or Android, any sort of smartphone that someone might have. And what I compare it to is a mobile business card. So picture a realtor having this application on their iPhone. They're at an open house. They come across someone who's interested in doing a loan. They can very easily go right into this application, put that lead's name, email address, phone number. When they click submit, that lead is now going to get your mobile business card, which you see right here, so they have all of your contact information. You're also going to get an email with the client's information saying you need to reach out to Joe Borrower. So picture a realtor handing 2 paper business cards over the internet so these 2 parties can get in contact with each other. The realtor no longer has to carry around a stack of your business cards. Anytime they go to recommend somebody through that application, they're obviously recommending them to you. It also has current interest rates for the day. It's a national average with a quarter point added to protect you. And it also has a great payment calculator. This payment calculator thinks a little differently than most calculators out there. How it works is most home buyers know their down payment and how much they could afford per month. So what does that mean? A realtor's at an open house, a potential borrower or potential buyer says, well, I have about $10,000 and I could afford $1,100 per month. Could I afford this home? The realtor could then go into that calculator, put the down payment, approximate monthly payment, based on current interest rates for that day. It'll then show the borrower approximately how much of a home they can afford. Great calculator. We find realtors love it. Most ones out there don't think that way, and this is all housed within your application. I said in the beginning, I want to teach you how to enhance relationships with referral partners. This mobile app is one of the ways. Another way is to just kind of show this system to people you may want to get referral business from. I can't tell you how many financial advisors, when they see a presentation done for a borrower, have never seen anything like it. Most loan officers use that email, Excel spreadsheets, and financial advisors have been using a system like this for years. If you were to create one of those videos for one of your potential refi or purchase clients and send that out to some potential financial advisors and say, hey, I just wanted to touch base. I know you're in my area. This is how I do my business. This is what I do for every one of my clients. They see that you're focusing on eligibility versus suitability, something they do on a day-to-day basis. You're more likely to probably work with them in the future or at least give a nice introduction so you can try and win them over for referral relationships. At the same time, you may build a great symbiotic relationship where you guys are sending each other leads, candidates, but that whole presentation is a great introduction to someone maybe you've never done business before. Realtors, you actually have the ability to give them an open house flyer template. What does that mean? I could invite a realtor to share a mirror system. The mirror system is like the Kiso Valet car. It then allows them to start that open house flyer template, put in the property photo, describe the property as they want, describe themselves as they want with their photo and company logo that they want in the plan, and then they have the ability to transfer it over to you. Keep in mind, they'll have no ability to present. It's just a mirror site. So they have to transfer the plan over to you before it actually has any loan programs or it's actually able to be printed. So as I said, it's like the Kiso Valet car. They could do a lot, but they can't present. So let's say I was a realtor and I started this Parkside Boulevard open house flyer. They'd be able to transfer the plan. They'd see your name right there and only your name. It'd say Scott Remite. They click send. As a loan officer, I then get an email saying, Diane Davis, your realtor, has sent you an open house flyer to finish. We include instruction videos on how to create those open house flyers. So keep in mind, it will take a little bit of time for them to learn the template, no more than about 5 to 10 minutes. So they're not doing anything with the loan scenarios. I said training videos. We're big on training over here. We have this support tab, which includes video lessons, case studies where we actually sit down with real live loan officers, talk about how they use the system to be successful, best practices, all the new software updates. So these videos are all available for you to watch at your convenience. Along with myself, I am the product manager. I have a sales team and a customer service team we've trained over here. So if you get stuck on a plan, you're working on something, you have to get it out right away, you call us up and we help you out on a one-on-one basis. But these videos are here if it's 8 o'clock at night and our office is closed. I know I went through a lot. I wanted to give you the 12,000-foot view of the system. I could go into it at a more granular level, but I think for this webinar, you got a good overview on how you could use this system to convert a few extra leads into loans, to use this system to enhance those referral relationships, to ensure compliance, and then last but not least, make you seem more professional in your competition and stand out versus the other guy down the street. With that, I'm going to jump into the questions. I've seen a lot come through the webinar, so I'm going to start from the beginning. That is the end of my presentation. If you guys would like to sit around for the questions, feel free. As I said, it was recorded. We are going to be sending this out. I want to show my contact info one more time and go over that special pricing I was going to let you know about. Here's our contact info one more time. Feel free to contact me directly, whether that's by phone or email. If for any reason I can't get to that phone call, if I'm on the webinar, I will return it within 24 hours. Email is the best contact to reach me at. Corporate inquiries, if you think this solution might be something for your company to look at, feel free to contact Mark Teteris, and he can get you in the right demonstration mode. As far as pricing, the system retails at $47 a month. Everything I showed you today is included in that $47. That's the open house flyer, the presentation, the live screen share, the mobile app. There's nothing that's not included in that $47 price point. We offer an annual solution at $470 a year. That would take you through 12 months. What we're offering today on this webinar is if you're to sign up either today or tomorrow, for the $47, you're going to get 60 days of the solution. So you're basically going to get 2 months for the price of one. You try it out, 2 months. There's no contract. If the 60 days pass and you say, this just isn't for me, I didn't use it as much as I want, it nixes. If you're to commit to the annual at the $470, you go, this is a great tool. I will use this. I'll incorporate it in my business. For the $470, we're going to give you 14 months of the solution. If you do the math, the $470 divided by 14 months breaks down to around $33 a month. A live screen sharing software costs around $33 a month. We used to sell the mobile application at $20 a month. So everything you see here at an annual price point, it's $470. We'll give you 14 months. If you just want to commit on the monthly basis, I told you 60 days for $47. This pricing will not be available to anyone that was not on the webinar. It's available for today and tomorrow only. As you see on my contact information, you can reach out to me directly or just call our 1-800 number and they'll get you on touch on the phone with a salesperson and they'll walk you through. They know about our special rate. With that, I know I'm at that 3 o'clock point. I am going to finish up with the questions that were asked. So if you did ask one of those questions and you want an answer, I'm going to hang on and do those right now. So let's jump back into the software. All right, let's see the top. Are the slides available to us? Yes, the slides will be available in the webinar recording. To produce an APR, we have to get a quote on all closing costs, select the lender, know their FICO. Many of the clients get a call with a rough idea of their rates, and I'm hearing we cannot quote without a generic rate without completing the application. No, this is a pre-GFE system. The information you enter inside of that Manage tab, it's all up to you. The APR is based on the closing costs you enter into the system, so it's not based on the current loan scenario. I mean, you don't have to worry about that. We also allow for a manual adjustment on APR. APR is treated differently with companies all around the country. Some base it on 365 days, some base it on 360. So it can always be a little off based on your specific application. So keep in mind, if my APR comes out at 3.125% and it's really 3, I can manually adjust it. We have the full APR disclosure, and I know some people actually shop APR. So if you wanted to lower just a little and you know you're right around 3%, you have that manual adjustment capability. Are you able to import all the liabilities, or I have to enter them all individually? As an individual user, there is no import of liabilities function. We do offer a corporate solution where we do synchronization between LOS and CRMs where those liabilities can be imported. As an individual user, we have no ability to have those systems talk to each other, so you would have to manually enter those liabilities on a customer-by-customer basis. Keep in mind, I said when I do it, if I'm doing a purchase, I usually don't even do any monthly liabilities. I just want to show the benefits of those loans side by side. And then with the refinance, unless I'm doing some debt consolidation, I'm just doing mortgage to mortgage. What are the advanced repay options? Part of the borrow tab are these advanced repay scenarios. I didn't even touch on these because it's part of the advanced users in the system, but the system has a lot more capabilities than I even showed you today. You could almost take that role as a financial advisor, and if you showed other monthly liabilities, show debt repayment strategies like lowest balance first, highest interest first, biweekly mortgage payments. So that's all available in the system. Do you use this every day? Probably not. But if you get a client from a financial advisor and you want to show this type of stuff, you absolutely have the ability to inside of the system. Is there any way to map, migrate, imports field, and application of MSS? As I said, on an individual user basis, there's no manual, there's no automatic importing of client information. Keep in mind, we offer this as a corporate solution, and we can have those technologies talk to each other, but the cost of those technologies to integrate, it's just not feasible for an individual user. Is a client watching these changes live as a webinar? They can be. You could be doing exactly what I did with you guys right now through that live screen share. So keep in mind, if you wanted to run through a plan as a client sees your screen, change from a 30-year at 3.5% to down to 3.25%, you could absolutely do that. Could a live screen share be reviewed at a later time? Example, if a wife is absent on the initial call, just to review both with 2 days for a recapture. Yes, the idling software has a recording. So just like I'm doing with you guys today, you have the ability to record that presentation you do maybe for the husband, the wife wasn't there, and you can send it to her at a later date. Do you have sales staff to assist with the scenarios in the beginning for accuracy? That's what I told you before. I take phone calls. If I'm available and you have a question, if I'm not on a webinar or training call for a company, I'd be more than happy. I respond to emails with screen captures, with video recordings. I also have a sales staff that I train the system along with customer service. Many of them have prior origination knowledge, so they're just as fluent as I am. But keep in mind, as you go through it, if this is something you need help with, we are staffed over here to help you with the system. Is your program incorporated with Encompass? It can be, but as I said a few times, it's one of those things that usually only companies know, not individual users do. The key figures are a bit misleading since it shows payment savings, but you illustrate that it would be applied to the payment and provided in the 10-year savings. The wealth impact is a little different than what most loan officers are used to. It's the total net benefit of moving from A to B. So if I go through that refinance one more time, let me explain it in a little more detail. So let's go back to that sample refi we did. Let me stress, the payment savings, if I'm applying that additional $235 a month, there really is no payment savings. His payments are identical. If I remove that $235 a month, then he's saving payments. He's going from $199 down to $171. That's where we're getting that wealth impact of $22,000. We're also taking into consideration he's losing a little equity. So the total net benefit, the increase or decrease in payments and the increase or decrease in equity gets me that final number. Is the 3 scenarios the max columns? No, you actually have the ability to do as many scenarios as I want. So let's just say for that purchase example I was doing before, this FHA versus conventional. In one of my plans, I wanted to show all 30-year options. And he also wanted to look at 15-year options. Obviously, he wouldn't be looking at FHA then, but let's just say that's the case. Very easily, I could duplicate that client, click copy. I'll see my copy right here. And I'll just label this one 15-year options. So everything I did before, and then I would just go in here, change the low programs, and maybe show 3 15-year options. One at regular interest rate, one with 1 point, one at 2 points, and the other one had a 30 at regular, 1.2 points. So you're not limited to the amount of clients you can copy, but you are limited to 3 alternatives per plan. But you could just easily copy that client. I see one of our competitors is $80 a month. That's great. I know we have a very aggressive price point. I haven't seen any tool out there that does as much as we do for $47 a month. Can any of the information you place be exported into the origination software? Yes, we do allow for exportation. So if you were to go through this plan, use this as a first data point, you have the ability to export to a Fannie Mae 3.2 file right here in the presentation tab. The $47 a month is the price of the system. So once the 2 months are done, you're going to continue for $47 a month from then on out. The price wasn't the deal. It's the fact that we're going to give you 2 months to start the software at $47. And then say starting that 3rd month, you'd continue at that $47 price point. What is the learning curve based on previous history? As I said before, within about 3 to 5 plans, I really felt comfortable with the system. It was easy for me to use. I was about 90% proficiency after that 3rd to 5th plan. It was right in that 4-plan mark that I was like, all right, I get this system. Keep in mind, everyone works a little differently, but it's really pretty quick. Do we have weekly trainings? Yes, the system, we have these webinars, which are, I don't want to say more sales webinars, but we try to teach you how to use this system more fluidly. We also have Todd Ballinger, founder and CEO, where bi-weekly he does a case study. As I said, those case studies are real-life examples on how loan officers use the system to be successful. Can each page be watermarked with a logo? The final presentation that I'm going to show you continues to have your information up top. This is the information that's on every page. So you'll see it on a PDF. That doesn't change as I scroll through each slide. So all my contact information, my company logo, that's all locked in the system. With that, I would like to thank everyone for attending this webinar today. Hopefully you got a few things out of it that even if you don't maybe use this system that you could just use to enhance your business, but as I see the market today, where we're heading, I couldn't see a better product to help you leverage your sales, protect you against compliance, and all in all, just make you a better loan officer from start to finish with those applications. Once again, thank you everyone for attending, and as I said, this recording will be available that I'll send out an email in the next few days. Thanks a lot.